Hello. Welcome to another Uncomplication. This is going to be a good one. I don't post very often because I feel that I only want to post when I have something worthwhile to say. I think today is one of those days. Take a look in the description how you can support the channel, become a patron, become a member, subscribe, share, all that stuff. And if you like the vibe, check out my art offer. But let's dig in. So I posted this survey a couple days ago because I was going to make a video. And I want to start here because I think one of the most important things in this whole space is being aware of your bias. I talk about my bias quite a bit, but here out of 322 votes, more than 3/4 of the people responding to the survey, and I presume watching, are either invested to the balls, and if shit goes down, they die, or they be holding like a mofo, just poke me when it's all-time high again. So 3/4 of the people watching, perhaps you, are looking at this, and I suspect that you are channel surfing. You're trying to find people that line up with your biases, that are telling you what you want to hear, that make you feel good about your investment. I know that that's how I operated when I was invested to the balls, and I would have died had I not gotten out before the 2021 market cycle peak. But I just want to acknowledge that because where I'm coming from in all of this is wanting to share information that for me has been really enlightening. Things that got me disconnected from the roller coaster of just that emotional fear and greed index. So I want to just kind of maybe check you at the beginning, and because I think as you watch this, I can almost guarantee that as I go more down this rabbit hole of what I think is happening and the evidence to back that up, spoiler alert, I'm not here pronouncing doom and gloom, but I think that, that's my first kind of appeal to you, is really know that bias. And I think it's really important that we do recognize that, like it or hate it, the market that we're looking at is far less driven by the fundamentals of any given project, including Bitcoin. The narrative of it being a safe haven against inflation and the dream for a unbanked, unregulated future, those things really fall flat when it comes down to just pure market psychology. And looking at the crypto fear and greed index, here's the most recent couple of months, and we're down in fear. And what does that mean? How does that drive the market? If you're looking at your investment, you're looking at the moves that you've made in the last 6 months. How can we project these forward? And I do want to start with some of these kind of pillars of psychology and market dynamics that have come to mean so much to me. Wyckoff, there's the saying, if you have a hammer, everything looks like a nail. And I've been called out a few times of like, oh, you're applying Wyckoff to everything. And in a way, I think that the thing that's so cool about Wyckoff is that it is just this way of looking at human nature that puts the two poles of the greed response and the fear response into this really clean, I have it here, I drew this a couple years ago. It's the mirror. It's the effect of our grasping desires and greed are mirrored by how we react when we're fearful. And so as these oscillators happen, the fear and the greed, which are not just happening, they're being done to us. That's how these cycles work. So I want to actually back up even one step further, and I want to share a little bit of kind of the fundamentals of my analysis here as we look at the short-term and long-term moves of Bitcoin. So, all right, Wyckoff, we've talked a lot about that on the channel. I think a lot of people in the space, are sharing a Wyckoff-ian perspective, and it was just a distribution, or are we in a reaccumulation, et cetera, et cetera. Even before that, I think it's important to know of the concept of Dow theory. And Dow, this is the same Dow, I believe, that is, the Dow Jones Industrial Average. This is a pillar of the old school market technical analysis kind of dynamics. And I think his is actually the most basic. And it really just talks about uptrends, sideways trends and downtrends. And in crypto, we hear all the time this conversation about bull markets versus bear markets. I actually really like Wyckoff. I believe this is his quote or someone in that orbit saying, there's not bull markets and bear markets. There's markup phases where the price of something is being marked up, and there are markdown phases. And similarly, with just the pure essentials of the Dow theory, there's uptrends. And if you zoom way out, you can look at these big uptrends. If you look at the Dow Jones Industrial Average and just see this up and to the right, you can see that in a lot of these stock prices, and that's why the blue chip stocks are always where the safe investments, just the small gains, but over time they grow and grow and grow. And so when we're looking at crypto, it's important to be aware of the big trend, the big up and to the right trend of Bitcoin and these assets kind of becoming mainstream. And then within that, are we in an uptrend or are we in a downtrend? Because those things have different patterns, they have different impulse waves that fill out that pattern. And so this is what we're going to be kind of building our whole analysis on. And it's just really good to be aware of them. Regardless of what you emotionally want Bitcoin to do, knowing, are we in an uptrend? Are we in a downtrend? Are we in a downtrend in a larger uptrend? These are important concepts to keep in mind. And just another concept to lay on the pile here, I think that the three pillars for me are Dow, Wyckoff, and Elliott. And they're just like different facets of the same psychological puzzle. It's all about psychology. So when we look at Elliott waves, again, we've got impulsive waves that take us up higher, and we have waves that are descending in those markdown phases. But it attaches to the human psychology. We see again and again and again these impulse waves when prices are going up, and eventually they can't be sustained anymore. They're building this structure, they're building these ranges on the way up, and then there's a correction. And nothing ever just goes up infinitely, and again, waves inside of waves. So if you're looking at Bitcoin right now, and let's start from kind of the most zoomed out perspective, the overall trend, let's start there with the Dow theory. The overall trend, well, where is it going? Logarithmic regression. So this is a real easy overlay for a crypto chart like Bitcoin to just see where is the larger Dow motion, the trend. And the trend, I think very clearly, is over time a very strong uptrend. And just real quick, a lot of people will scream at me like, oh, you have to use a log chart, you have to use a log chart. I think that the log chart just has a certain flavor and narrative that, depending on your bias, you like seeing better than others. And when you put on the logarithmic chart, you actually see the tapering off, that things eventually plateau. And even though you're getting into these higher and higher prices, like the image is one of kind of diminishing returns, which is also important to know, because the stories that we hear that really get people foaming at the mouth about crypto are predominantly people that bought in 2015, the people that bought even in the COVID recession, and then boom, they're seeing these huge gains in their wallets. That's a lot harder to do when you're up in the red bands of a logarithmic curve like this. So something to keep in mind. Okay. So when I was looking at this previously, and I did a number of live streams and other noodlings recently, but let me turn off the logarithmic regression bands, kind of breaking it down now to our next set of concepts and looking at it from an Elliott wave perspective. There's lots of different ways to draw these Elliott waves, and this is what I had most recently. And you can even see, this is where my prediction was wrong. And I actually, I was selling a lot of what I accumulated here just because I needed to for my own financial reasons. But I expected, things to kind of come down before they went back up. They just took off, and so it's been like, okay, I can enjoy the view from the sideline. But this is basically the picture, that first big peak. If you kind of filter out the noise of this stage being very, very early days. So this was kind of the analysis and the prediction that I had previously, thinking that the 2021 peak was a 3, and then we came down for a 4, and then up to a 5 for the all-time high that we had in 2021, previous all-time high, and then an ABC correction, and then there were lots of different ways to look at these waves, and this was one of them. But the thing that's interesting is that, regardless of how you slice the onion, I guess, like let's say that in fact we could kind of combine the 3 and the 5 from that previous analysis into just a 3, come down for a 4, up to a 5. We're running out of waves. We're all out of waves. Need to go to the ocean. We're running out of waves. Just as far as the macro scale, zoomed out, the psychology of these things. And feel free, put in the comments your analysis. I know a lot of people, especially knowing that potentially 3/4 of you watching have, likely been buying and buying and buying and buying dips and just, invested to the balls. If this goes down, I die. There's a million people on YouTube that will tell you like, oh my gosh, this, the Trump administration is adopting it. It's going to be the next whatever. And so, we came down, but we're only minutes away from shooting off to, 100,000, 200,000, that kind of up only mindset, I think really misses the power and the, these cycles. That's what drives the market. It's cycles. It's, how do you get a price from $13,000 back up to over 100K? You can't just, push that up indefinitely. It requires the building of the structure. It requires these moments of FOMO-driven, oh my gosh, ETFs just got approved, everyone needs to buy in, and that takes us up to the next range. So my point is, nothing in nature is a straight line. Everything has this structure, and so if you're looking at your investment and you're just needing it to go up only, I think you're kind of missing that however you slice the onion, we're getting to a really important kind of end of a first cycle and beginning of a new cycle. And that, I think, is actually exciting when you really think about it, that this could be our new one, right? But what happens after a 1? If we go back to our little Elliott Wave picture here, after a 1, we retrace. So there could be a lot more happening, but we're talking big scale, zooming down into the short time frame. So the other thing that I want to, if I can get back here, share that I've been really interested in and I've just been following is this volume question. Because what's so interesting to me, too many indicators. Okay, there we go. Okay. Too many indicators in the kitchen. It's been just baffling to me that, this is Binance. Here's the bull market of 2021. And, the volumes are just so much higher than what we've been seeing recently, really since April 2023. The last big buying candle that we had on Binance was in March of 2023. And this is where, when I was looking at this in this analysis, if you recall the ABC and coming down before the move back up, a lot of that was looking at the volume. And even here, if we look at, this is the volume range profile. So this is showing where the highest trading volume is in these different ranges, and the point of control being this highest bar all the way down here at 19,000. So in this chart from Binance, the highest interest, the highest trading volume was happening at $19,000, and it has just like tapered and faded to almost nothing as we've been way up here. So that to me has just been this big caution, like, the interest is down here. This is where the volume is. But here's the interesting thing. If I remove this from the view and we just look at, this most recent round, where's the volume? Where's the beef? So this will adjust based on what's in view. And so, still, the biggest volumes are way down here at 25, 26, and we've got these little pockets, which it makes sense. Here's kind of this. If I draw a box around it, this whole range here lines up with a big volume profile, or a bigger than what's around it volume profile. Not surprising. This was a whole range that happened before the Trump election, took it off to the next level. And then if I kind of just draw a box here, the next volume. But this to me has kind of been like this unsolved mystery of looking left. Why are volumes down so low? And one of the things that I've been exploring and just curious about, again, zooming out and realizing that this cycle is it's fundamentally different in what's driving the price, I believe, than the previous cycle. I think that this previous cycle was driven by predominantly consumer and consumer purchasers, through apps like Coinbase and exchanges. Whereas right here, this first big expansion, and I might be getting these a little bit off, I think this was like the rumor of the ETFs. This was the confirmation of the ETFs that kind of took us up. But not only does that narrative drive the retail buying, that's what I was looking for, the retail buying, it also, I think, changes where the buying and selling is happening. Because one of the things that happens quite often in markets of all type is there's the public market. This, I can see that on the sidebar here. I can see the price. I can see the volume, profiles, indicators, technicals. A lot of people are trading on that. But now with the ETFs being a major component of the market, a lot of that buying and selling is happening off exchange, over the counter. So the data for that is a little bit harder to come by. And to be honest, because I haven't been looking at it as long, I'm trying to catch up and just figure out where's this hidden volume? How are we going from these prices of $19,000 where there's a lot of interest in buying and selling, and that really, as a retail market, that had a lot of interest, and then we've squirted up into these other levels, even though the volume has been next to nothing. This concept that Trump is in office and now Bitcoin reserves for the U.S., et cetera, et cetera, et cetera, but no one's coming into these levels and buying up Bitcoin. Again, psychology, et cetera, et cetera. But where's the beef? Where's this hidden volume? And so I have been looking at things like the exchange trade volume. What's the actual volume on the exchanges versus the Bitcoin inflows and outflows from the various ETFs, and these change day to day. So there's a different way to kind of see this picture. I think this is probably my most the chart that has interested me the most. This is just over-the-counter buying of Bitcoin that's being mined by miners, and the miners, rather than selling it on the open exchange, are selling it. It's called OTC, over-the-counter, in these. You can think of it as backroom deals. Both the miners and the big operators, they don't want to be driving the price down or up out of the range. If they all kind of were doing this on the market, the price could get away from these very controlled zones. And so with this is the balance of OTC stock, I believe, how much is available over the counter, and I think it's been going down. And this is where if you want to comment in the comments and help illuminate this chart a little bit more, but essentially there's divergence here, right? The price is going up, the supply from the miners is going down, being sold, OTC. And so, I don't have a finished, puzzle to put together here, but it's really clear to me that trading is a different beast when we're looking at exchange data. And when I say me, I'm looking at the technicals of this exchange data. I'm trying to use things like volume indicators to make predictions, or just see if I can test what I think I know. And there's now this real shift from a lot of the buying and selling happening off of the exchanges. So that's just an interesting dynamic. I think it's something that's good to be aware of. And now kind of the main event, the main piece that you've probably been waiting for is like, where's it going to go? What do I think? And all of this is with a grain of salt. I am just another random dude who, got into Bitcoin, went down the rabbit hole, learned the technicals, learned all this stuff, dug into the data. I am not someone who has been professionally trading for 50 years and has a huge, even a huge account balance to show that I'm a good trader. I think I actually am a horrible trader. That's why I don't trade. That's why I think a lot of people shouldn't. That's my preface, is take all this with a grain of salt. Here's what I'm seeing though, is looking at the waves, looking at the psychology, and remembering that the entire point of Wyckoff is not so much like learn this pattern, you be rich. It's just the recognition that the way that bigger operators make money off of the less informed is a rinse and repeat process of driving that narrative up, driving the markup of the stock or the share or the crypto up, and getting it in a range where it can be sold over months and months and days. Well, the thought is it's going up, it's going up, it's going up. So people are buying and buying and buying until finally it turns around and bad news follows, and the narrative basically swings on people to now, we're in the accumulation phase, which is the best time to buy, but it's also when the news is the worst. And, the greed or the fear index is down, and everyone's, speculating and hypothesizing doom and gloom. And, is this going to break down? Oh, it looks like it's going to break down. Oh, it looks like it's going to break down. And then, the narrative turns around. But it's not overnight. And we've seen that whereas in 2021, 2020, these were happening on just a matter of, this is a weekly chart. So, just week after week after week after week after week of uptrend before this distribution. And now this is kind of the rhyming I see is, this kind of expansion, this reaccumulation, whatever you want to call it right here. This is about the same psychological level from the bottom as this was in 2021. And when I say this is, where are we? Yeah. So this is about, $35,000 in 2021. And that is roughly equivalent to the psychological value of 65,000-ish in 2024, etc. And then if I have my volume profile back on here, and let's just filter out the noise from that previous cycle, where is the volume? We've got this big cluster here. We definitely have a big, the point of control is still way, way down here. But, we've got this big pocket here, this big pocket here. That, to me, lines up pretty nicely with these ranges. If I just zoom into only this, it's kind of hard to get just that one view in view, but there we go. So here's that box. So, this is where it's like, this is, to me, far less interesting, but what I would see from kind of a rhyming scheme is, again, knowing that, they know that we know, and they know that we know that they know. So they know that we know that they know that we know. And the psychology just gets, each time more easy to get lost in the sauce. But then when you go back and look at the chart pattern, it's like, oh, duh, like, this moment here and this moment here not only rhyme, like if you flash me a picture of one or the other, I probably couldn't tell you which was which from just a quick glance. So, we are having very similar effects. I really, really feel, this is my feeling, I think that there's another version of history where, this was the 3, and come down to a 4, and then up to a 5 that's more like here before an ABC, and we wouldn't have seen these $100,000 prices again until that one wave of the next big cycle, or the 2 wave of the next, or 3. I'm getting a little lost in the sauce myself. But anyway, my point is, I think that these were really, when I say these, it's like the ETF announcement. This right here is the Trump election, right? October, November. So Trump gets elected and the thing just like blasts off. If Biden or Kamala, was elected, this very well could have been, back down for this longer filling. So I think we've been living on borrowed time, but that's the opportunism of this market. In this wave before, this was, gosh, also Elon Musk. This was Tesla announcing that they were buying Bitcoin. And now here in this cycle, this is, the very obviously named Doge, Department of Government, whatever, coming in and saying that they're going to whatever. And now we've got this kind of artificially propped distribution. Question is, where's it going next? Let me delete all of my crazy scribbling from the chart. What I would expect, and I haven't been watching crypto YouTube, so I'm guessing that there's millions of other knuckleheads saying things really similar. But I think that we're going to come down. I think we're going to come back up and play with some of these levels again. And we are eventually going to just break down into this general pocket. And I don't know that it has to be as deep as last time. I think, the kind of around the 70, 72, this would be deep enough to kind of prime the spring, as it were, for another run. I don't know why we wouldn't. I think that there's enough easy to manipulate news and bias that we could easily see kind of that double top that we did last time. Will it break through? Will it go to all-time highs? Will it just kind of be hanging out here? I don't know. This is where I'm like, ugh, I can hear myself talking. It's just so wishy-washy. But yeah, this is kind of the picture. I think that if we go back to the Elliott waves and we look at this being the 5. I'm sorry, this being the 3 collectively. Come back down for a 4. We're looking at either, this being the 5 or something very close to it up on top being the 5. And actually, as I record this and I think about it, what strikes me is that it's almost too obvious, right? And what I've learned more than anything is that in crypto, when you think it's going to zig, it zags. And the real quick and easy way to get wrecked is to think that you're smarter than the average bear. So I present all of this as sort of like the zoomed out picture, these fundamentals, what have happened in the past, will it rhyme, will it happen again? But the truth is, nobody knows. I think that's why the most important thing is to be really clear with you and your story and your thesis and what you're in it for. And the most important thing, I think, is just understanding the cycles and not getting suckered into the narrative, because regardless of what the long-term pattern is, I mean, that's the thing. I'm drawing these lines that go all the way out to March of 2027. Like, this is so far in the future. There's so many things that could happen. What's more important is when you hear that news cycle that's trying to get you to buy something that has been marked up, what are you going to do? When you're in that cycle where it's giving you the doom and gloom and all hope is lost and you're sitting there with red bags and finger on the button, what are you going to do? So I think it's less about nailing this kind of a big macro view. It's always easier to look back and see what happened and comment on it. And it's a much different experience, I can tell you from experience, to be invested only insofar as is comfortable, but not investing with the assumption that this is going to save you from your financial issues, that this is going to make you a millionaire, that there's some little flashing ticker on this right-hand side of the screen that's about ready to pop off, and it's, just deploy your capital in all these crazy places and listen to influencers. I think more than anything, what I've said on this channel the most is this is fun, this is interesting, it's a microcosm of human psychology that is, for me, just really satisfying, interesting to look at and take apart. But man, go outside, get some fresh air, find the places in your life that are most important and invest there. And those things will return a billionfold over catching any of these little swings. That's my belief. That's the one piece that I can tell you with full open-hearted certainty, is that I believe you will be a more happy, joyful person if this is less of your time and is also just a curiosity and maybe a place to make a few bucks. And if you really want to become a trader, find real traders who are making real money, not just the people on YouTube, including myself, who are, philosophizing and humming and hawing. There are methods of trading crypto and Forex and other up and down motions, small percentages over time, small risk, managing that risk. But that's kind of my message here on this channel, is uncomplicating this from all of the technicals, all of the flashing, to just that basic psychology. And I wish for you the best. If you enjoy my content and you want me to make more, support the channel. I just started memberships with the YouTube channel, so you can become a member, get first access to videos. I'm also an artist. That's what I do. That's where 99% of my time is spent. And so there's a little art offering in the description you can check out. You can follow me on social media and see all the beautiful objects that I create, paintings and all of that good stuff. So, all right, thank y'all. And until next time, cheers.